Tom Lee has made a bold prediction. He believes there's an investment that could grow 10x in just a few years. And according to him, this might not take decades.
It could happen in the next few years.
So, what is this mysterious investment? And what about the other 7 stocks that he's incredibly bullish on right now? We'll count down from stock number 8, which is a fascinating one, and build our way to Tom Lee's 10x call. Apple. Now let's start with Apple. Many Wall Street analysts have been cooling off on Apple stock. They argue growth has slowed and innovation is lacking.
Like for me, Apple has been sort of quietly ready to pounce on AI, but I don't think they need to pay up for any of these models. So I think Apple is going to surprise people. I mean, they didn't launch an iPhone until 2007, and mobile phones had been around for 15 years. But when they did enter that market, they completely transformed the marketplace. So to me, I think when they want to play big in AI, and when they do in that moment, I think they will change the game.
It's a big prediction, but as bold as that sounds, it's still nothing compared to his 10x forecast, which we'll get to later. Stock number 7, Nvidia. Next up is Nvidia. By now, everyone knows Nvidia has been one of the hottest stocks on the planet. But Tom Lee doesn't think the story is over. In fact, he believes the stock still has a lot more room to run. As Lee puts it,
you should sell Nvidia if there's another Nvidia coming. But how is someone going to replace Nvidia? They're in all the data centers. They have CUDA. They have Jensen Huang. The smartest people, when they graduate college, they don't apply for a job at AMD. They want to get a job at Nvidia. Until that changes, no one can touch them. Like, who is a threat to Nvidia is another Nvidia. And if there's no other Nvidia, then you stick with Nvidia.
Sure, the stock isn't cheap right now. Nvidia's market cap has already exploded to over $4 trillion, with a PE ratio of 56. But their fundamentals have been growing just as fast. And as long as they remain the king of AI infrastructure, the market is going to keep rewarding them. Stock number 6 and number 5, Google and Meta. Now for stocks 6 and 5, we're grouping 2 giants together, Google and Meta. Tom Lee ranks both of these as some of his highest conviction trades. Let's start with Google. On paper, it looks like a bargain. Right now, the stock trades at a price-to-earnings ratio of just 20 compared to the broader market's PE of 30. That's a big discount, and yet their fundamentals look phenomenal. Over the last 7 years, Google's revenue has tripled, going from $110 billion to $350 billion. Net income has jumped nearly tenfold, from $12 billion to $100 billion. So why is it so cheap? The answer is competition. Many people are turning to AI tools like ChatGPT for queries they once asked Google. While this hasn't hit their core business in a meaningful way yet, investors worry it could eat into Google's dominance in the future. Now on to Meta. Like Google, Meta is also a cash machine. In the past 7 years, its revenue has quadrupled, and so has its profit. Their ownership of Facebook, Instagram, and WhatsApp means they practically dominate the global social media landscape.
Google and Meta. They're both giant companies tied to so many things. They're tied to millennials. They're tied to AI. They really are tied to cybersecurity in their own way. And they're very leveraged to things like monetary policy and also the business cycle.
The Granny Shots ETF. Now, before we move forward, let's quickly touch on something Tom Lee recently launched, Granny Shots ETF.
Now, you might be wondering, what is a granny shot? And the granny shots is named after a type of free throw that was popularized by Hall of Famer Rick Barry. He chose to shoot his free throws underhanded, as you can see on the right, and had a 90% success rate, while most people shoot free throws overhanded and have a lower success rate.
Currently, the Granny Shots ETF holds 38 stocks. The largest positions are in Robinhood, AMD, and Oracle, though most positions are evenly spread around 2-3%. It only launched in late 2024, but already it has beaten the S&P 500 by 8%, returning 13.4% in its first few months. Yes, it has an expense ratio of 0.75%, but for investors who trust Tom Lee's style, it's an easy way to buy into his best idea, Ethereum. Now, this next one isn't a stock at all. It's a cryptocurrency, Ethereum. Back in 2020, Ethereum was trading at just $350. It skyrocketed to $4,700 within a year, then crashed back down, and is only now starting to recover. So why is Tom Lee bullish on Ethereum?
Well, to me, Ethereum's having its Bitcoin 2017 moment again. In 2025, a couple things are happening around Ethereum. The first is the Genius Act is now making stablecoins kind of green lighted, which is the ChatGPT moment for crypto. The second is the SEC is pushing forward with Project Crypto, which is actually asking Wall Street to move the entire financial system onto the blockchain. And the third is almost all of it is taking place on Ethereum. JP Morgan's building their stablecoin on Ethereum. Robinhood is tokenizing on Ethereum. The custody banks are doing it on Ethereum. So it's really where Wall Street meets, but that's also where AI is meeting crypto. Because as you know, as we tokenize and move towards robots, you need a token economy to control them, which is taking place on Ethereum.
Right now, Ethereum trades around $4,600. So Tom Lee's math suggests a possible 6x increase. Let's move to another highly debated name, Tesla. Tesla's stock has been stuck in neutral for the past 4 years. It was $400 in 2021 and now sits around $325. The reason? Growth has slowed. Sales have plateaued. Profits even dropped in 2024 from $15 billion down to $7 billion. And yes, critics say Elon Musk has been distracted with ventures like SpaceX, X, formerly Twitter, and Neuralink.
I think Tesla is one of the most important stocks in the market because not only because of what Tesla does. Remember, Tesla is making electric cars, and they have a huge advantage. I mean, they completely changed the automotive industry, not just because they made batteries better. It's also because they have expertise in manufacturing. Now, manufacturing for cars is one of the hardest things to do because of the supply chain. So if they can dominate manufacturing of autos, Tesla will dominate whatever industry requires manufacturing in the future.
Now, let's get to the investment Tom Lee believes could 10x in value, the one that has everyone's attention. That investment is Bitcoin.
So I think digital gold means Bitcoin should be worth over $1 million per Bitcoin, and it could happen in the next few years. But maybe pricing 25% of that, especially with Genius Act, makes sense.
The way to think of Bitcoin is that it should have the same network value as gold. And gold, if it's a $23, $30 trillion asset, that means Bitcoin should be at least $1 million, $1.5 million per Bitcoin.
Gold has a market cap of roughly $22-30 trillion. Bitcoin's market cap today is just around $2.3 trillion. If Bitcoin were to match gold as a digital store of value, its price would need to rise 10 times higher.
Yeah, I mean, I think Bitcoin is, if you're buying Bitcoin today, it's still early. I don't think it's too late. So if you have zero exposure to Bitcoin and you feel like you missed it, 95% of investors have zero Bitcoin exposure. So you're still way ahead if you're buying Bitcoin today.
If you found this video helpful or insightful, consider giving it a thumbs up and subscribe if you'd like to see more deep dive, value-focused investing content.